Growing concerns about coming regulations for crypto wallets, KYC rules, and stablecoins have spooked some crypto investors. And if you only read the headlines screaming about coming crypto bans, the end of crypto, all that scary sounding stuff, yeah, there might be some reason to be spooked. But if you dig a little bit deeper, then things actually look very, very different. So I'm going to break down the situation for you in this video and try to separate out the fact from the fiction. Also, Bitcoin's Giga Chad is gearing up to buy another $650 million worth of Bitcoin in the coming days. That's totally crazy. This is coming at a time when we see balances for Bitcoin on exchanges continuing to fall once again. At the same time, we also have crypto taking off really big on OTC markets, and we get an Ethereum ETF in Canada. All very, very exciting stuff. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the crazy markets. Also, just a quick reminder too before we do begin, Femex is still running their crazy trading bonus deal. You can get up to a $720 trading bonus depending on how much you deposit. And if you sign up using the link down below in the description, then you're also going to get 10% off of your trading fees in addition to that big bonus. So Femex, by the way, in case you're not familiar, it's a great exchange where you can long and short Bitcoin and Ethereum, loads of hot altcoins like Cardano and Chainlink. You could even sign up for a zero-fee spot trading account, which if you're a regular trader making lots of trades every month, doing day trading and stuff like that, you can actually end up saving a lot of money by signing up for this service. But do act fast, as the bonus is a limited time offer. It's only going to last for about another week, so get involved if you do want to get it. Now let's talk about Bitcoin. Bitcoin has been seeing a sharp decline in available supply on exchanges. Again, obviously it's been a pretty big trend this year, but withdrawals were basically moving sideways during most of November. So we kind of plateaued out after this big long trend of just going down. So we didn't have any big outfluxes of Bitcoin from exchanges. But in the last few days, this has really started to pick up again. Really starting at the beginning of December, we saw a lot of Bitcoin again leaving exchanges, but there's been an even bigger uptick in just the last few days. So again, we're seeing buyers coming in, buying Bitcoin, taking it off of exchange. It's a very, very bullish indicator showing that even at the current prices, investors want Bitcoin. There is a just massive demand, and it just keeps getting gobbled up. They buy the Bitcoin, they take it off the exchange. It's long-term holding kind of stuff here. And on the topic of Bitcoin being sucked up off of the market, Michael Saylor's Microstrategy has just finished a $650 million bond sale. Now, the proceeds of that bond sale are going to be used to buy Bitcoin in the coming weeks. That's just unreal, man. Now, initially, they were aiming to raise $400 million. They had so many buyers, they sold $650 million of the bonds. The level of conviction for MicroStrategy, unreal. Now, at today's prices, that's going to buy them around 34,000 more Bitcoin, bringing their total Bitcoin holdings up to around 75,000 Bitcoin. And while these purchases will be done via Coinbase's OTC desk as to not, have a dramatic spike in the price of Bitcoin, the reality is that the availability of Bitcoin on the OTC market, it is not infinite. Demand is not slowing down. It's picking up all the time, which is likely why we've not seen any of those dramatic, 30% drops yet during this run-up, because every time we get a 5 or 10% drop, the buyers come in and just gobble, right? It's an unprecedented level of buyers coming into the market right now. Very exciting stuff to see. Big public players like MicroStrategy, yeah, they're getting a lot of press, rightfully so, but we still have all those family offices and hedge funds who continue to buy Bitcoin more on the down low, right, via NYDIG and Grayscale or just directly on the market, right? The announcement last week by Mass Mutual that they bought $100 million worth of Bitcoin. It's just another one to add to a growing list of companies taking the plunge into Bitcoin. And the more players enter the market, the more players will continue to enter the market. It becomes a self-fulfilling prophecy. Bitcoin is right now being social proofed by big money players like MassMutual, Microstrategy, and Square, and Stan Druckenmiller, and Paul Tudor Jones, all these guys, right? It's going to be massive for 2021 because everyone's saying, hey, it's cool, come buy Bitcoin. And according to a report by Markets Group, which is an OTC desk, which is the operator of the largest OTC trading markets in the USA, they're saying that 3 of the 5 top traded assets on the OTC markets in the USA are cryptocurrency shares. In particular, Grayscale's Bitcoin and Ethereum products, but straight into the top 5 is the hot newcomer Bitwise 10's crypto index. Now this is further evidence that big money investors, they want access to crypto and they're buying large amounts of it. Because retail traders, they don't really use OTC desks. This is where the big money guys, they're going seeking exotic stocks or, of course, now stock represented as cryptocurrencies, right? So very exciting to see that happening. Also this week it was announced that an Ethereum ETF has gone live on the Toronto Stock Exchange. So the fund raised $75 million prior to listing. Now this is the second product from the company 3iQ to hit Canadian stock exchanges. The first was their Bitcoin fund. Obviously now they have their Ethereum fund, which has come out. This is yet another just super easy on-ramp for investors who want to be able to get access to cryptocurrencies. Obviously 3iQ is nowhere near as big as Grayscale, but still another big company out there buying up crypto en masse to represent it in their funds. The combined effect of so many big players coming into the crypto space, offering these products, is basically like just, creating massive amounts of rocket fuel for the market, which gets us ready, of course, for our moon mission. And finally, for today, I want to talk about something that's been really trending a lot in the cryptocurrency community recently, and that's regulations that are coming to the cryptocurrency industry. Surprisingly, a lot of commentators have been caught off guard by the announcements over the last few weeks from regulators. Yet, these regulators have had very clear and consistent remarks coming from global leading regulatory bodies for a long time. None of this stuff should be a surprise. So in June 2019, the Financial Action Task Force released a new set of recommendations for its 37 member countries. Now, in particular, they said that crypto exchanges and wallet providers would need to collect know your customer information for every transfer to and from their services, essentially requiring your name and your ID to be linked to your Bitcoin address. So if you want to withdraw Bitcoin from an exchange to your personal wallet, well, that needs to be a doxed wallet, right? That is connected to your public ID. Likewise, if you want to deposit to an exchange, it's going to need to come from a doxed address, from a wallet which you have revealed yourself to be the owner of. You may even need to prove provenance of funds. So if you receive Bitcoin from somebody who can't prove who they are, that may be problematic, right? We haven't seen that as a definitive yet, but that's likely to be part of the picture. Thus, it should be no surprise when last week it came out that the U.S. Treasury Secretary is seeking to impose exactly those kind of regulations on the cryptocurrency industry. And then on Friday, we got some more news that France is going to be implementing basically the exact same kind of laws, right? Again, heavy KYC for cryptocurrency providers. More countries will announce this kind of stuff soon. We'll probably see a European-wide regulation coming out in the not-too-distant future, would be my guess, right? If France is already doing this. Welcome to the new normal. The days of the wild, wild west for crypto, they're slowly coming to an end. Not to say that innovation is going to slow down, but that the sheriff is inevitably coming to town. Tax evasion, money laundering, terrorism financing, they will be, of course, the excuses used to wrangle in the crypto industry. Obviously, we just need to casually ignore the painfully obvious hypocrisy that the banks are the biggest knowing and willing enablers of tax evasion, money laundering, and terrorist financing in the freaking world. But if we just ignore that, because it seems the regulators are, then this is basically what we're seeing right now. the evolution of the cryptocurrency industry. And if it's done right, it's not necessarily going to be a painful thing. It could actually end up being a healthy thing for the crypto markets. Regulations were always going to come. Bad actors like BitMEX and Tether could only keep getting away with this stuff for so long. And then, of course, we have things like the recent moves by Iran and Venezuela to use Bitcoin to sidestep US sanctions. A crackdown was inevitable. That stuff can't go on for long without regulators trying to do something about it. The only question was, in what form would those regulations come? Well, the current proposal could add a lot of burden for some users of cryptocurrency, but as we see Bitcoin become more and more an instrument of big money investors and retail investors, putting Bitcoin in the retirement accounts and stuff like that, then the ideals of, privacy become less and less important for many users. In fact, I'm willing to bet that most cryptocurrency users, not all, but most cryptocurrency users really don't care about the revolution, right? Bitcoin, Ethereum, DeFi, it's all very exciting technology, but they're mostly just here for the sick gains. They see the ups and downs of the crypto market, how much money can be made. That's why most people are here. That's the reality, guys. The most important thing to realize with the coming wallet rules is that this is not a ban on cryptocurrency. It just removes some aspects of anonymity. Right or wrong, most investors probably aren't really going to care. In fact, many investors will likely welcome these new rules. It's going to make the industry more serious, right? Also, we have multiple parties right now working on decentralized ID products. Now, these kind of products are actually going to allow you to signal ownership of an address, for example, without actually revealing all of your data out to everyone in the world, out to the public, right? So that's going to be, I think, an important part of this process, ironically. Crypto providing the solutions for these kind of regulations. Now, in the same way the coming wallet KYC rules have been kind of blown out of proportion, so have the coming stablecoin rules been blown out of proportion. Which, again, should be no surprise that these rules are coming. In April this year, the Financial Stability Board recommended heavy regulation on centralized stablecoins and a possible ban on decentralized stablecoins. And just last week, what did we see happen? House members in the USA introduced a bill to basically force centralized stablecoin providers to go out and get a banking license and to get registered with the Federal Reserve and all that jazz. Now, how did the providers respond to that? Well, Paxos basically went straight out and announced that, hey, we're going to apply for a banking license. Problem solved, right? Why fight it? Just go get a banking license. Deal with it. USDC has not announced seeking a banking license yet, but I think they'll be able to get one very, very easily. They could even just do something like a merger with one of their partners like Goldman Sachs or Visa to be able to work around getting a banking license. So I could easily see that happening. Or if they do apply for one, I'm sure they'll get one very, very easily, considering who's backing them, people like Coinbase, right? However, operators like Tether, they're going to be left out in the cold. And to be honest, no one's really going to miss them. No one's going to cry any tears over Tether, right? Years and years of shady dealings have left a bad taste in the mouth of many a crypto user. Good riddance to USDT, I say, personally. And then we have the decentralized stablecoins. Look, here's the thing with that. Regulators can't actually stop them. The Stable Act in the USA didn't actually address decentralized stablecoins. The only addressed ones are backed by dollars, right? But, regulators can make it more difficult if they want to cash out for decentralized stablecoins. They can't stop them. That's the point of decentralized stablecoins, right? And likely, anyway, if the system is sufficiently decentralized, they're not likely to fall under the same kind of scrutiny that the centralized stablecoins are. Anyway, long story short, regulations are here. We're going to have to deal with it as it comes out. This was always going to happen. Anyone who thought that crypto is never going to be regulated, you're living in fantasy land, man. Like it or not, though, this actually brings more legitimacy to the industry and will bring in even more money, especially from the big money players who might be sitting on the sidelines still thinking like, oh, crypto, I don't know, man. This is going to be a signal like, yeah, crypto's fine, man. Crypto's not going anywhere. There's no bans or any of that stuff. The only place crypto's going is to the frickin' moon, guys. Anyway, those are just my 2 Satoshis. What do you think about all this? Do you see all these regulations coming out as a positive or a negative thing for the crypto industry? Let me know down below in the comment section. Thank you so much for watching today's video. Long live the blockchain, and peace out till next time.